It is a complete free fall in Tokyo, and if you think this is just a Japan story, you are mistaken. This is the first domino in a global chain reaction that ends at the US Treasury's doorstep. Look at what just happened at Tokyo right now. Japan's 10-year note yield just hit 1.9%. That is the highest level since July 2007. Think about that. Before the great financial crisis, just a few years ago in 2019, these yields were negative, minus 0.28%. They have rocketed up over 200 basis points. The Bank of Japan has lost control of its bond market. And here is the insanity of the situation. They are preparing to raise interest rates to fight inflation and defend the yen. At the exact same time, the government is launching a massive $135 billion stimulus package. They're hitting the gas and the brakes at the same time. It's economic schizophrenia. How long can they hold it? Well, they can't, and something has to break. Either the yen collapses or the bond market explodes. They seem to have chosen the bond market explosion. Now, why does a yield spike in Tokyo matter to the fiscal position of the United States? Because Japan is the whale. For decades, Japan has been the largest foreign buyer of US government debt. It was the greatest arbitrage trade in history. So you could borrow a yen for free at home, and both US treasuries paying 3, 4 or 5%. It was free money. But look at the board now. If Japanese institution can get almost 2% risk-free at home without currency risk, why would they buy Uncle Sam's debt? The carry trade is dead. The whale has stopped eating, and this is happening at the worst possible moment for the US. Our debt is over $36 trillion. We are running $2 trillion annual deficits. During peace and prosperity, the Treasury has to issue trillions in new bonds just to keep the lights on. Who is going to buy them if Japan walks away? This puts immense pressure on domestic buyers. It puts pressure on the TGA, the Treasury General Account. As the Treasury drains liquidity to fund the government and foreign buyers step back, there is less cash in the system to absorb this debt. This forces US yields higher. The US 10-year is going to spike in sympathy with Japan. And the Fed knows this. Powell is trapped. He wants to cut rates because the economy is weakening, but the bond market is revolting because of the supply. If US yields spike too high, the housing market crashes, the banks get insolvent. So what is the endgame here? It is three-letter acronym we haven't heard in a while. Yield curve control. If Japan stops buying, the Federal Reserve will have to step in and be the buyer of last resort. They will have to cap yields to prevent fiscal collapse. That means quantitative easing on steroids. It means printing money to finance the government directly. It's the final stage of the sovereign debt bubble. This brings us to the changing world order. The rest of the world is watching this. The BRICS nations, they see the US and its allies drowning in debt and resorting to money printing. They see the Western financial system buckling. Why do you think they're buying gold hand over first? Gold is the only asset that is no one else's liability. When Japan loses control and the US is forced into yield curve control, the value of fiat currency itself comes into question. Gold is sniffing out this economic debasement. And this ties directly to the petrodollar. For 50 years, the world held dollars to buy oil. They parked those dollars in US treasuries. It was a perfect whoop. But if the US treasuries are being monetized by the Fed and the real yields are negative, why hold them? Why sell your finite resources, your oil, for a debasing currency? Saudi Arabia sees Japan cracking. They see the US is trapped. This accelerates the move away from the petrodollar system. It accelerates trade in local currencies. What we are witnessing today in Tokyo, that 1.92% number, is the sound of the old financial architecture fracturing. The Japanese safety valve, which kept US rates low for a decade, has just been welded shut. The era of cheap money is officially over. The era of fiscal dominance and currency debasement has begun. You need to be positioned for a world where bonds offer no safety and cash is trash. It is going to be a wild ride into 2026. If you want more insights about how the world is changing and what goes economically and financially, please subscribe to this channel. It helps us grow and also helps us put this content out there. Stay safe.